Hey there, everybody. Welcome back to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. Wonderful to see you all once again. We are still in this process of waiting for these FTDs to finally come onto the tape. Will today be the day? Let's take a look at some of our data and see if it can give us any inclinations whether any of this expected ETF FTD settlement is finally ready to make an appearance in the lead market. So we'll spend some time updating this particular hypothesis about our price action this weekend and next week. Before we do, however, we will go over to our gratitude. And our gratitude for this week once again goes out to Adam Graff. I believe today is his last sponsored newsletter. So after one solid month, thank you very much, Adam Graff, aka MGO Blue, for sponsoring today's newsletter and video breakdown. Thanks as well go out to our monthly supporters, Not Medical Advice, Kurt Lusko, Cosmotropic, Swag52, and Hey Luckies, aka Faithless Looter. Thank you very much for helping offset some of my data expenses on a regular basis, on a monthly basis, I should say, as well as to everyone else who has donated to the channel, to my research publication efforts here. Many thanks to everybody who's dropped a comment, right? Drop a comment, drop a question, gives me some, something of a lead to go down. You guys hit me up with stuff in my inboxes, either here, over on Twitter, stuff like that. All of that is very helpful. So definitely want to give you guys, all of you, a shout out for helping with that. And of course, great questions. We always have a chance to break down at our weekly live streams coming up, of course, again, this Friday at 4 p.m. Eastern time. Let's go ahead and dig into some of our material for today. Yeah, we're waiting. I like this little picture of our little chimp guy here waiting. It does seem to be the case. Right, we get into these moments. There's almost this kind of lull in our price action, where it feels like, right, we kind of get that initial inkling of, ooh, it really looks like we're about to move higher, and then somehow it's a couple days and we kind of just freeze in place almost. So let me bounce over to our charts here. Look at some charts. Right. And, I wanted to point out a couple different moments here. So we got this pullback yesterday, stayed above 30 the whole day, which was, certainly welcome. I think the average price on the day was still higher than it was the day before, even though we did have, we had a higher open, lower close. Very interestingly, right before we have these bigger movements to the upside, we will have these kind of conspicuously not volatile days. So yeah, it's sort of this like calm before the storm type of thing. So we'll have very little price movement, a very tight trading range. So for example, back in February, right before we moved into even if we go all the way back into the fall, right? So heading into the big September pop there, like a bunch of days, just super flat, nothing going on, extremely low volume. Same thing again, right? It picked up, big volume, IV come down, we moved back up, a little bit more volume, but then those few days before we exploded into cat day, very low volume, very little movement, very low IV. Then we move up, we have some nice IV days here, and then we kind of flatten out again. And then before we start moving, right, of course, we get a little red day before we start cranking. Back here in February, right, again, these couple of very tight trading range, very low volatility, very low volume days before moving into some of this upward volatility in February. Same thing back here, right? We get this kind of pullback day before we really have one of these big candles to the upside, right? Pullback day, surprisingly red, low volume. Pullback day, surprisingly red, low volume. Let's see. This one too, actually. Pullback day, surprisingly low volume. This was a little bit more volatile. I don't know if I'd include that one in the data set. Right, back here before we started moving back to the upside into earnings. Last earnings period we had this, right? Even the day before earnings, the day of earnings, the 25th, unassuming day. Low volume, low volatility, barely changes in price throughout the day. Very reserved, very modest. Couple days like this back here before we moved here, and then we kind of had this stutter step. We moved to the upside. Volatility chilled for a bit. We traded down, right? These days, we get these kind of days. low volatility, these low volume days, relative to what we have seen recently in terms of days. This recent yesterday, right? Yesterday's trading certainly fit within that category. So, right, this could be a good sign in terms of preparation for moving to the upside. I mean, certainly, if we are going to have a big day today, tomorrow, something like that, a lot of FTD settlement occurring off of, especially now we're getting into this XRT window. Today is the final eligible day for closing out VT FTDs from the 14th of April. Today is our should be our third day. Yeah, today is the third day eligible for the first batch of XRT FTDs. I believe it's the first day of eligibility for the 417 XRT FTDs. And of course, it's the first or second day of eligibility for potential creation orders coming in to close out these IWM FTDs. So today's a big candidate. Obviously, if you're over on Richard Newton's channel, checking out his models there, right? Various things he's working on pointing to this range potentially coming to fruition. Obviously, right, we've got Ultimator playing around with his indicators, possibly suggesting a move up. If you just want to go with kind of feel, right, kind of feels like we're going to get some kind of double top thing, maybe, right? It's there somewhere, right? But in any case, if we are going to get something that does serve, as a relatively fine opportunity to for institutions, that they pull us back yesterday in order to set up for this potential bigger move to the upside. I guess we'll know, right? We're not going to know until we really start moving to the upside, right? It's always a case of after the fact, post hoc, in the sense that if we start moving to the upside pretty heavy today, well, I guess we'll have an understanding of why we pulled back yesterday, right? So we'll break down that. I want to break down that trading day a little bit. Before we do, right, we did spend a little bit of time on tinfoil yesterday, but very interesting to see whatever is going on here with Buck the Bunny. GameStop is active on their socials, right? So we see Buck the Bunny posting this coded sequence here, which translates to, I think it is Buck is traveling in the third dimension or something like that. So could be right, a little investment hint there that possibly GameStop is thinking about a three-dimensional investment, something branching out into some new potential field of investment. And also Buck the Bunny stopped following Greg. So is this kind of a paralleling? Does this play into this theory of Buck the Bunny possibly going and looking for Roaring Kitty? Is he an allegory for Roaring Kitty, right? We do know that Roaring Kitty unfollowed Ryan Cohen. Is this a sort of mirror pattern? We have now Buck the Bunny unfollowing Greg. Is this allegorical in some sense? Always fun to get a little not TA, but tinfoil in there to see what's the company may be hinting to us. So interesting to consider that. What I will say, right, we're still waiting on these FTDs to come through, but how has this looked in terms of setup heading into here? We do have some interesting criteria. I don't know why the text on this article is difficult to see, but now it's highlighted in blue, so it's easier. So we have seen several things that have been very interesting this particular, I would say over the past sort of month of these bigger bull moves here. And we've talked about them. We've broken down these trades in previous videos. So interestingly, right, we can start out and say that, okay, we just talked about this pullback feature, just a few minutes ago. We've noticed as well that the borrow rate on this new GMEU ETF. So GMEU is a new feature to the trading landscape. This is not something that we've had in place for these particular cycles in the past. This 2x leverage GME ETF. They do operate by holding GME derivatives. They do not hold GME shares based on what their institutional filing suggests. They maintain and constantly rebalance at the end of each trading day in order to have 200% exposure to GameStop via derivatives, via swaps, which they hold through, what is it? Clear Street. So something of that sort. So we have noticed that their borrow rate is extremely high, right? I mean, it is credit card rates, and I mean that literally. It is over 29%. If you want to borrow shares of GMEU, you are paying a hefty fee in order to have those on loan. So very interesting to see that this time around. That's been a feature of our price action over the past month or so, right? That's been something that's unique to this landscape. Whoop. And then we've also seen these very curious, these high volumes, large and sustained flows of deep in the money short put synthetic long stock positioning. So, for example, just before our bull move from, let's say, May 8th, end of May 7th, but May 8th, May 9th especially, we had two pretty strong days of deep in the money short puts. So these are functioning as synthetic long stock trades. Did talk about this on prior videos, actually back in this range here. So you can go find this in the GME playlist on the channel. I'll take a look and link it down below in the video description, so you can go check it out if you like. We got a second wave of this, much bigger, right? So this was about 30 something million, I think, in net premium. This one over here was huge. I mean, this was maybe 70 million in net premium or something like that. I forget exactly how much it was. It was quite a lot. No, it wasn't quite that high. I think together it came to something like 80. So between the 2 days, between these two episodes, it came to about 80 million in premium. Very, very high, extremely high. And then immediately after this, right, we got two pretty strong days, one weekday in the middle. So we got one really strong day, a weekday, a really strong day. And then, when the guns stopped firing, all of a sudden it was time to crank to the upside. You can see call flows pop up here along with our price and implied volatility. And then, so then we got a bunch of selling. We got a bunch of volatility being sold here as price came back down. We did get some of these closed out, not nearly all, like nowhere close to being all of them. But past couple days, earlier this week, we've seen another couple of days here, pretty heavy flows. And that was the case. We saw it last Friday, and then yesterday too. Now, smaller than what we saw last Friday, much smaller than what we saw on Monday this week. But right, it seems to be the case that while these puts are coming in, while these short put orders are coming in, these trades are being made, these deep in the money short puts, the stock does not move up, right? So the stock is not moving up. This seems to be the case that there are institutions who are positioning these trades to take advantage of some of this upside, and that the very fact that they enter into these trades may influence how they attempt to control the price, or the very trades themselves may be influencing price action with respect to GME starting to move to the upside. So if we see these stop today, this may be a good sign that we are about to start moving back up to the upside. We stayed pretty elevated, although, pretty low volume, pretty low volatility, a little chop there. We did get a new weekly high up at 31.5. And then we started to slip down throughout the day. We did get some blockish kind of options orders. We got some 28.5 long puts opened. We got some 32.50 calls in a block of 5,000 closed in the very short term. So a couple bearish blocks. We did get a new call debit spread in addition to the one that we saw a couple days ago. So now there's a 6.6 long 30 leg and a 6.13 short 32 leg that have been opened. We can take a look at that. Those came through in 5,000 call blocks as well. Not the type of flows we're used to seeing. I know everybody gets their little kitty sensors up when we hear the word 5,000 call blocks, but it's pretty small. This is pretty reserved at this point, but very interesting to see that trade come through. In fact, when it did come through, we did see this pretty heavy reversal back to the upside, so almost back up to VWAP. Before what came in, was it? I think it was then those long puts came through toward the close there, the 28.5s, and that kind of brought us back down. Does look like there was some XRT redemption, not yesterday, but the day before, which supplied some synthetic liquidity and allowed some repositioning of the price, right? So we can see that really this was up at 4 million. So available shares gradually kind of trickled down throughout the day to 3.4 million by close, second half of the day. Got down to 2.9 million overnight, and they've been refilled since. How are we looking actually right now? Let's take a peek here. Yeah, pretty stable at 3.5 million. Yeah, so you can see here, right, this big block come in. That's a pretty highly traded strike in general, but we can see, you go look at the data and you see this guy come in, and as soon as this guy comes in, right, we got that nice big rip up towards almost 30, 50. So that's pretty cool to see toward the end of the day. Here's those puts coming in at the ask right afterwards. Yeah, and then, if we go and take a look at our chart here, it does look like we had that nice little bounce off of the 20-day SMA. We do have our moving averages upward, right? We also have this, kind of nice daily moving average cluster down there, right around where the estimated net asset value floor is. So, we don't have that much farther down to go. If we do start, I should probably say when, but still something of an if we do correct back down to the downside. If we go back into another liquidity cycle here. Still looking okay in terms of, in terms of our moving averages, in terms of our momentum indicator, I should say. Maybe we get something of a touch here that then, helps us take off to the upside. We love to see that 55 crossing the zero line. So all good to see this kind of chugging back to the upside here. But, at the same time, with the exception of those puts, pretty low in terms of options activity, not a lot, especially, if you take out those block orders. Very low options activity, not a lot of activity yesterday. Again, low volume. Did we crack 6 million on the day? I don't even know if we ended up cracking 6 million volume on the day, maybe just 6. Yeah, just slightly over 6, not even 6.1. So, very interesting to see that as well. Max pain value sitting around 30. 29 for next week. So, all of this is stable. And if we look at our, GEX environment here, here's our composite overall. We can still see this broad sort of 30 to 40 structure. Most likely price action, even if we do get some high volatility going into the end of this week, is probably still bound within 35. If we do look at 6.6, if we do try to anticipate how delta decay is going to affect our price action, right? So the later we get into the week, the more sensitive the contracts that are closer to the money are going to be in terms of delta appreciation. So they're going to be very, very sensitive to changes in price. That they will have very high gamma values. What's very interesting is if we stay above 30 here, this 30 position is going to prove very supportive as we head into the end of the week. So the later we go into this week, the more shares are going to be hedged in this position by the options market maker. And as we sort of operate along these 31, 32 levels, right, that's also going to really affect the degree to which the market maker is going out, is buying and selling shares in order to properly hedge these positions. It'll get most volatile, of course, as we head into Friday. So very interesting to see that. Taking place there, to see how that ends up affecting our price action as we head later into the week. So certainly some opportunity for some, if we do kind of hang out right on top of that 30 level, even if it's for another couple of days, we may have a pretty cool gamma ramp opportunity there, just based on the sensitivity to movement in the underlying that a lot of these call positions above us will have. That could be an interesting setup for Friday, even if this ETF FTD formula does not end up panning out immediately, right? Maybe they really just find a way to push this stuff really close to earnings, but maybe those IWM fails, or maybe they really did end up clearing these VT fails. Maybe they found a way to use GMEU to kick some of these other fails, but interesting options environment nonetheless that we could see could generate some interest, even if it's, say, just up to something like 32 or 32.50 or something like that at the end of the week. So worth monitoring, of course. I'm still watching this, obviously, to keep track of this particular formula and thesis with respect to ETF activity. So so that's going to be it for today. Good luck right out there with your trading, we'll see you all tomorrow morning for another video breakdown. So thanks very much, everyone.